What's up, crypto junkies? Welcome to a new news segment. And today, man, oh man, do we got some news. So today we're going to be talking about Bakkt, that's spelled B-A-K-T, the new trading platform by the people behind ICE. And we're going to talk about Visa, MasterCard a little bit, and a little bit more into banking behind some of the exchanges. So that's what we got up for today. Let's go ahead and dive right in. Now, before we get started, I want to cruise through some headlines with you, okay? Baidu, B-A-I-D-U, that's the main search engine in China, is actually teamed up with Tron. This is like an official thing now. I know Tron is notorious for announcing news about future news, possibly news, but they are 100% confirmed that they are going to work with Tron. So that is very interesting. Slightly concerning from a freedom and sovereignty standpoint, but very good from a coin holder standpoint for somebody who doesn't really care and just wants to make some money. Next, we got 660 Bitcoin that are seized from various criminal activities at a federal level in the United States that are now going to be auctioned off. So that's, I guess, maybe a little, I don't know, is that a double standard? A little bit? I don't know. Ticketmaster has acquired a blockchain focused firm called Upgraded. So this is not a cryptocurrency. This is a blockchain based technology company, which is great because, Ticketmaster is like the number one ticket issuing agent for everything tickets. And so for them to be exploring and jumping into blockchain is very, very exciting. I'm sure they haven't been sitting on the sidelines waiting. I'm sure they've been researching their faces off, and this is the best bet that matches with them. So let's see what that brings in the months to come, right? Goldman Sachs and Mike Novogratz recently teamed up for a $15 million investment into U.S. custody service BitGo. So that will be a custodian of Bitcoin. They will hold it. Okay, it'll be like a reserve bank, essentially, that holds the physical. They will hold the physical private keys, which, obviously hold the digital cryptocurrency. Kind of funny how that works like that. We'll actually be talking more about Goldman Sachs in just a couple minutes. Goldman Sachs has been busy, little busy eddies. The US SEC has launched a strategic hub for innovation and financial technology in and around the cryptocurrency industry. So we'll see who gets the contracts and who gets the money out of these things. Usually they'll go, this is what lobbying is. And so usually these interests are made specifically for certain people and certain parties. And the last thing I want to talk about, which is further concerning with the whole Ripple project, is that the Bill and Melinda Gates Foundation has partnered with Ripple and Coil to implement Ripple's integrated ledger protocol and develop their mobile platform for the unbanked. Newsflash, Bill and Melinda Gates aren't actually out there for your best interest, and there's quite a substantial amount of evidence of this. You could go down that rabbit hole yourself, but those who are usually the loudest about their philanthropic adventures and endeavors are usually not doing it because they care about the people. So very further interesting pieces of information. I brought up in the last video another development with the UK establishment getting involved so that you could go Ripple to Israeli fiat. So very, very interesting stuff. Okay, next piece, let's talk about Bakkt. That's B-A-K-K-T. Sounds a lot like Bakkt, like backed by. And this is a project that has been talked about quite a while. It's supposed to be launching in November and is run by John Sprecher's wife, Kelly Loeffler, or I guess maybe they're not husband-wife, different last names. But he runs the New York Stock Exchange, essentially. He doesn't, but he runs ICE, which runs that, okay? ICE is Intercontinental Exchange, and they run the New York Stock Exchange, which is the largest stock exchange in the United States. One could argue one of the largest in the world. And this project is geared up to launch in November. Now, what you heard about Bakkt before, I assume, was that the Starbucks partnership and Microsoft partnership, which Microsoft is going to come in on some of the tech, and people were assuming that Starbucks, maybe you would be allowed to check out with cryptocurrency. They, after that, denied it. So at this point, it's still a big fat question mark on what Starbucks' involvement and role is with this. But Bakkt will be the first federally regulated price discovery contract for digital currencies. So what this means is this is a similar vehicle to like an ETF. There will be a custodian and a certain amount of physical cryptocurrency held, and then you will be able to quickly transact that. So back and forth. So this will fill a gap of retail money. The Bakkt custodian piece, since it is federally regulated, I think there's going to be a ton of players who get on board and leverage this. The first one, and most notably, being Goldman Sachs, which this news launched earlier this week, that Goldman Goldman Sachs wanted to use the custody service or the custodian piece of Bakkt for themselves. And I think Fidelity would probably want to get in on this too, because I just told you recently about the Fidelity news, them wanting to move into cryptocurrency. And so a lot of these guys will not want to launch their own custodian service and center and apparatus. They will want to just leverage somebody else's. And why not one that's federally backed? And I think they're going to be approved, this is speculation, by the CFTC. Oh my God, that'd be a perfect marriage, right? Well, later on, they've denied it. Okay, Goldman Sachs have come out and denied any interest in Bakkt custodian services. Okay, which I'm not believing at all. So let's dive in, take a step back. Now let's talk bird's eye view of what Bakkt is. It's essentially a whole ecosystem, and it will be used, I think, in a similar way to how ETFs will be used. ETF is just a paper way of trading Bitcoin. So from a retail standpoint and sophistication standpoint, it will appeal to a wider demographic. So yeah, this is John and wife Kelly. They kept different last names. Okay, interesting. So yeah, he's the president and CEO of Intercontinental Exchange, ICE. They own one of the world's largest. Yeah, I was right. New York Stock Exchange. So anyway, so she is the CEO of Bakkt. It will work similar in terms of like a second layer. It'll work similar to Lightning Network. And that second layer is, again, they hold the underlying assets and allow you to come over the top and trade quite quickly and transact quite quickly between each other on the next layer up. This is what's called rehypothecation. And this is where essentially you have an underlying asset and you take it and you go over to this guy and you leverage that asset to get more money. And you go over to this guy and you leverage this asset to get more money. And guy B doesn't really necessarily know of guy A, and nobody really knows of how thin you've stretched yourself with future promissory notes and over leveraging the underlying asset to go and get all this additional credit or money. And that's what we're talking about here. Is this is going to take and essentially stretch the total supply of Bitcoin beyond 21 million, which it's estimated now 4 to 5 million are lost. So that puts you at about 0.22 BTC to be in the top 1% of holders. Anyway, that's going to take that and stretch it out, and it's going to turn into very much a game like gold. Now, a lot of people think that ETFs are going to be great for cryptocurrency because they were great for gold for like the first 12 to 24 months. And I think it'll be similar here, and I think this will actually be one of the things that will be a negative towards Bitcoin in the long run. Okay, so short-sightedness, being myopic versus long-term and long ball. So anyway, ETFs are, off the table until around February 2019, but there's a couple things that I wanted to highlight here. I read through all this earlier. They've been working on this for 14 months, believe it or not. Better yet, an entire ecosystem regulated and solid as the New York Stock Exchange. So this isn't looked at as a new product. This is looked at a continuation and a new arm of the New York Stock Exchange, which has tons of clout, tons of street cred. I see a ton of other banks and institutions like Fidelity, like Goldman Sachs, like Bank of America, and what they want to get involved in with their different new arms with Merrill Lynch. And I see a lot of them wanting to get involved with Bakkt because of what it represents and its path of least resistance. Okay, Bakkt will physically hold the private wallet keys in which BTC will be stored and will allow on their platform the exchange of new futures based on physical Bitcoins. That's essentially what they're doing. They will hold the underlying BTC. I think they'll continue to stack new investment vehicles on top of this, and these will be the quote unquote second layers. So similar to Lightning Network, and here's where the rumors that it will be approved by the CFTC. Interesting stuff, right? Okay, so that's the Goldman Sachs side of it. Yes, they are going to use it. No, they're not. Now let's get into Merrill Lynch. So Merrill Lynch is an arm and a branch of Bank of America. So there's Bank of America, Merrill Lynch, U.S. Trust, Merrill PBIG, Private Banking and Investment Group, and Merrill Edge. And they've apparently taken a very strong interest into Bakkt as well, which makes sense. Merrill executives have had serious and ongoing conversations with Bakkt on how to benefit from the exchange network, custody services, and warehouse facility concepts that are set to come to market. Makes total sense, right? Those same Merrill executives are planning futures, NDF, and long tail ETF products that can be marketed and accredited investor clients first, and then more mass affluent clients next. You can go through, I'll have all these links obviously underneath the video, but it's just kind of summarizing some of the insider conversation that's been going on. You got to assume that You know, okay, so we got Goldman Sachs now, Bank of America, all the big players are talking about this. Citigroup will be talking about this. Chase will be talking about this. They're all trying to figure out how they can jock positions and get in there to offload other debt instruments onto and into this to help flush their books and obviously stay in profit. When you're robbing from Peter to pay Paul, which is what we were all taught to never do, and we were shamed and guilted when we were caught doing it as kids and as grown-ups, right? That's exactly what these guys do. That's exactly what the big banks of the world do. They rob from Peter to pay Paul, and they keep doing it over and over and over again. And if the eggs ever come home to hatch, the difference is that they get a bailout and you and I don't. So let's transition into the next piece of news. And what we're going to talk about next, shout out to Larry Cermak at Lawmaster if you want to follow him on Twitter. He's done a really good job of putting this together. The banks that back a lot of the primary exchanges. It took him 2 hours to collect this. Now, the reason why Larry talks a lot about Bitfinex, and the reason why is because apparently Bitfinex is the only one out of this list that uses aliases. They use alternative names and shell corporations on their account openings, and they keep having problem after problem. And if we think back to Bitstamp, they had a brief banking issue and they sorted it out. How were they able to sort it out so quickly? And Bitfinex is just like getting railroaded right and left and right and left, and this bank then dropped, and this bank then dropped. Well, it's because they're not putting even the correct names. They're using shell corporations and they're not being transparent. And banks can't operate when they know that. They can't operate with you anymore. And this has been posted on theblockcrypto.com. So here it is again, this little chart. Great reference piece to know really what you're dealing with. And if you don't know any of these banks, it's time to Google search these banks and figure out like what the hell they are and how they integrate into this, because you notice that a lot of these, the same ones mentioned over and over again. Okay, next piece of news. Visa and MasterCard are essentially trying to cut out ICOs and unregulated crypto brokers by deeming all of this activity high risk. What this means when you are deemed high risk is that from a merchant standpoint, it's almost impossible to operate. I've seen like high risk would be like the, I think for the longest time, probably the porn industry was high risk. Get rich quick, MLM, all that type of stuff is considered high risk as well. So according to the publication's undisclosed sources, the ban will be applied to brokers who operate from unregulated or loosely regulated environments and therefore have no license that would show the proper due diligence has been applied to their business. And this is applying and targeting non-EU countries, apparently. Okay, the new measures on CFDs will, for the first time, ensure that investors cannot lose more money than they put in, restrict the use of leverage and incentives, and provide understandable risk warnings for investors. So this comes in a long line of Visa and MasterCard really just trying to dial in and hedge their risk, you know, because they're on the line for this at the end of the day. So somebody pays with a credit card and invests into an ICO. The ICO folds, they do a chargeback on the credit card. Visa, MasterCard, a lot of people don't know this, but they 9 out of 10 times will reward you as the winner, no matter what. As long as you give decent amount of proof, then they will award you the winner. That's how it used to always work. And as far as I'm aware, it still works the same way. Okay, so they will always reward the customer. That whole adage of the customer is always right. And I think that just makes it easy for them, because just imagine the size of the department they would need. PayPal does it differently, and just look at how much of a disaster that is. So PayPal doesn't always reward the buyer as the winner or the customer as the winner. Sometimes it does reward the merchant as the winner in disputes, okay? Anyway, getting off on a tangent there. So yeah, here's the full piece on this. Very interesting stuff. So it will have a negative effect on a lot of different crypto projects, because what will be required to look legitimate, that will be things like not being looked at as a security. Anything that's being pushed out by the CFTC and the SEC, they would want it to like be passing these quote unquote tests. That's all I got for you guys for the news today. Full plate, wow. If this is your first time to the channel, just go ahead and subscribe. Click the bell notification so you don't miss out on anything. If you want to support us and show your support, it takes a second, guys. Just click the like button. That helps this video go up in the algorithms and get shown more to not only our current audience and subscriber base. That's it. Be on the lookout for more videos dropping on the channel very soon, my friends. See ya.